Stop the hustle. Stop the worry. If you're here, it's because you're tired of playing a rigged game. You work harder, but the finish line keeps moving. That ends now. This isn't just a video. This is the complete, expanded blueprint to rewrite your financial destiny and claim your freedom. We are handing you the keys to financial literacy, the information the world keeps secret. We've distilled the strategies of the most successful investors into 5 fundamental pillars. We go deeper into these core principles than anywhere else. This is your revolution. The commitment you make right now is the most valuable financial investment you will ever initiate. Get ready. Get focused, because we're diving into the single most powerful and most ignored principle of all time, Pillar 1, the Wealth Mindset. Chapter 1, Pillar 1, the Financial Mindset. Pillar 1, the Mental Paradigm Shift and Behavioral Finance. True wealth starts between your ears. We must defeat 2 psychological enemies, the scarcity mindset and loss aversion. Loss aversion means the pain of losing $1,000 is twice the joy of gaining $1,000. This bias forces us to sell when the market dips. Your mission is emotional discipline. Workshop: Defining Your Freedom Number. You need a precise destination. We're using the 4% rule, or 25x annual expenses. Let's work through a detailed case study. If your target expense is $4,000 per month, your annual need is $48,000. Your capital goal is $1,200,000. This is your non-negotiable target. This number gives you power. The deep dive into assets versus liabilities. Liabilities make you work harder. Assets make your money work for you. Let's go deeper into bad assets versus good assets. A primary residence is often a lifestyle asset. It costs you money every month, taxes, maintenance, but provides no income. A producing asset, a rental property, dividend stock, puts cash in your pocket. Only producing assets build permanent wealth. Overcoming short-term thinking, the power of delayed gratification. Successful investors think in decades. We must adopt the mindset of our future self. Imagine your 65-year-old self. What does that person need you to do today? Every time you face a discretionary expense, ask yourself, is this purchase more important than future me's financial freedom? This visualization technique is a wealth superpower. Chapter 2, Pillar 2, Cash Flow Mastery and Debt Control. Pillar 2, taking absolute control of your cash flow. Listen closely. It doesn't matter how much you earn. It matters how much you keep. We champion zero-based budgeting, or ZBB. Every dollar must have a mission assigned before the month starts. This is about strategic allocation, not restrictive tracking. Crushing toxic debt. High-interest debt is a wealth-killing cancer. Eliminate it immediately. Use the debt avalanche method. Why? Because math doesn't lie. Attack the highest interest rate first and watch your capital accelerate. Be relentless. Building the financial fortress, the Enhanced Emergency Fund. Aim for 12 months of living expenses in a high-yield account. This is your personal insurance against panic, ensuring you never have to sell your assets during a market crash. This is your freedom buffer. Eliminating lifestyle creep. This is the silent assassin of prosperity. When your income rises, you automatically increase your spending. Fight it. Every raise you get should have 50% or more automatically redirected to your investments. Don't let your expenses rise to meet your potential. Chapter 3, Income Acceleration and Diversification. Pillar 3, the Wealth Multiplier. No budget alone can make you wealthy as quickly as increased income can. Focus on increasing your active income first. Learn high-value skills. Practice radical negotiation for your salary and aim for a 10% raise every 18 to 24 months. Passive income, the foundation of freedom. Passive income doesn't mean zero work. It means building automated systems that work for you. We focus on 4 high-leverage digital methods. 1. Digital products. 2. Content monetization. 3. Affiliate marketing. And 4. High-yield capital. The power of the side hustle fuel. Every dollar earned from a side hustle should be immediately earmarked for investment, not consumption. This turbocharges your compounding engine because you are using extra capital. Practical examples: high-demand freelance services, specialized consulting. Shifting from time for money to value for money. You must stop selling your time by the hour and start selling results and value. This is the key difference between an employee and a wealthy business owner or consultant. You set the price based on impact. Chapter 4. The Investment Engine. Pillar 4. The Wealth Engine and Compounding. A deep dive into compounding. It's a natural force. Let's compare compound versus linear growth over a 30-year span, using precise figures to show how the interest on the interest takes over in the later years. Time is your greatest asset here. The passive investor strategy. Why ETFs dominate. Why does Warren Buffett advocate for low-cost index funds? They provide instant diversification and extremely low costs. Explain the expense ratio and how even small fees dramatically cut into your returns over a lifetime. Keep fees close to zero. Highlight popular ETF tickers like VTI, VXUS, and VOO. Workshop: Building the 3-Fund Portfolio. We'll build the foundational portfolio right now. Component 1. U.S. Total Stock Market, VTI or VOO. Why you need this dominant exposure. Component 2. International Total Stock Market, VXUS. Why avoiding international exposure is a catastrophic mistake. Component 3. Bonds, BND or Treasuries. The role of bonds as a ballast during crashes, not just an income source. Define your risk tolerance and set your allocation, e.g., 80-20 versus 60-40. The power of dividend reinvestment. Explain the concept of DRIP, Dividend Reinvestment Plan. When you receive dividends, you must automatically buy more shares. This accelerates compounding dramatically, creating a perpetual wealth loop. This must be automated. Global diversification and rebalancing. Never bet solely on one country's economy. You must invest globally. Explain the crucial concept of rebalancing, why and how you should do it annually. Rebalancing forces you to be disciplined, sell high from the asset that outperformed and buy low into the asset that lagged. It's a mandatory wealth habit. Chapter 5. Building the Wealth Shield. The wealth you build must be protected. Discuss essential insurances. Health insurance to protect assets from medical bankruptcy, and term life insurance to protect your family's assets if you pass away prematurely. Don't leave your family exposed. Inflation is the silent killer. Inflation is constantly eroding your purchasing power. Your investments must consistently outperform the annual inflation rate. This is why holding excessive cash is guaranteed to lose purchasing power over time. Your capital must fight back. Tax optimization and legacy planning. As your wealth grows, managing taxes becomes the largest expense. Discuss the concept of tax-advantaged accounts, IRA, 401k, etc., and the simple concept of tax loss harvesting, selling at a loss to offset gains. Finally, discuss why every wealthy person has a will or trust to secure their legacy. Manage your money like a business. Final call to action. You have absorbed the complete financial blueprint. The key now is consistency and automation. Automate everything: saving, investing, and debt payments. Don't wait another moment. Start your journey today. Subscribe and watch our next video.